It's Ken Lake with MAC's technical market update for Thursday, March 16th. I'm going to start with May corn. And the corn, soybean, wheat market all have had major downturns here. 1, 2, 3, 4, 5, 6 days in a row we saw downturns. Now we have a 3-day upturn. So that in itself will signal a bit of a trend change here. However, fundamentally, ahead of the March 31st planning intentions and stocks report, would kind of expect that. I think the market turned lower in anticipation of the numbers. I mean, we think that corn acres will be down about 4 million acres from a year ago. Soybean acres up 4 million. Some analysts have indications as high as up 6.5 million acres. So would be a very bearish soybean number. However, the speculation would be as to how much of that number is already in the market at this point, and a significant amount of both are still in the market, with D's corn, for example, holding in fairly good up until this breakdown, and then Nov beans being weaker in this breakdown. The thing to be concerned about in corn today is right here. We're seeing the 20 and 50-day moving average at 372 begin to cross this 20-day trading under the 50-day moving average. We'll call that a bear cross or a death cross, some people try to call it. So it will, and coupled with the fact that fundamentally we have lots of old crop corn stocks, one could expect that old crop corn values will struggle from here on out. So we'll call support here at the Fibonacci number at 358 would be the support. Again, 3 days up does signal a trend change. We've got a buy signal back here in the momentum indicators. So for now the lows are in, but upside potential very limited. As we have the March 31st planning intentions and stocks report hanging over our heads. D's corn chart will look exactly the same. The death cross comes at 392. Fortunately for our customers, we've got decent hedges in above 390. Would say that we absolutely have to see this 4 million acre drop in corn acres in order to get more bullish corn. My fear is that I-State's corn farmers will go ahead and plant corn, and we may not see that 4 million acre drop. If we do not see that, then we're going to see this 382 support tested and bring 360 back into a possibility of testing if we do not see a pretty significant increase or decrease in seeded acres for 2017. Switching to May soybeans. May soybeans look really, really bad. Momentum indicators very oversold, but starting to pace sideways here. All these red days down with 1 day up signals to me that there is continued downside risk here. That risk would be another 40 or 50 cents down to about 9.45 in the May futures. Don't see a huge catalyst other than continued good production data coming out of South America as a catalyst for driving this market lower. But if we do see South American production continue to not suffer any losses, then we've got 50 cents of downside risk in old crop soybeans for the near term. In November soybeans, maybe not quite 50 cents of downside risk, but downside risk nevertheless. So here's how I think Nov beans could turn out. The market's expecting a huge increase in soybeans. If I-State farmers decide that they're not going to decrease corn acres that much, in other words, corn farmers want to farm corn, and they plant that corn, which would be bearish corn, but would be more bullish soybeans, as we would not see that huge increase or that 6 or 6.5 million acre increase in 2017 soybean seedings. And if we don't see that number, then we could be a little more friendly soybeans post March 31st.